Absolutely. So one strategy that I've used dozens of times to help people accumulate. So we're talking about investors. Let's say we're talking about investing into real estate and into investment properties, income producing properties. There's a using a combination of loans to take equity from your primary residence and buy investment properties with that. So let's say you've got $150,000-$200,000 equity in your current primary residence, and let's say you have no investment properties whatsoever right now. So you're just wanting to get into the investment property realm.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Investor Fuel podcast. I'm your host, Michelle Kesil. Today I'm joined by someone that I've been looking forward to chatting with, Jason Sharon from Home Loans Inc., who has been making serious moves in the mortgage space, helping people find the best deals for loans. So excited to have you on the show today, Jason.
Thanks. I appreciate it. I'm honored to be here.
Yeah, of course. I think our listeners are really going to take something away from how you're helping people lower their interest rates and find the best solutions for saving money and bettering their home. So yeah, let's dive into all of that. First off, for people that are not familiar with you and your world yet, can you give the short version of what your main focus is?
Sure. My job is to find people loans to purchase property or to refinance their existing property. Licensed in 7 states, basically all the Southeast. If I'm not licensed there, I could find somebody to refer you to, and I don't make any money off referrals, but my job is to find people money. I joke that I put people in debt for the rest of their life. I consider myself a debt advisor, not a financial advisor. I'm not, but how to advise people on managing their debt in order to grow their wealth.
Amazing. Yeah, I would love for you to expand on that, how that debt is able to produce more wealth in people's lives.
Absolutely. So one strategy that I've used dozens of times to help people accumulate. So we're talking about investors. Let's say we're talking about investing into real estate and into investment properties, income producing properties. There's using a combination of loans to take equity from your primary residence and buy investment properties with that. So let's say you've got $150,000-$200,000 equity in your current primary residence, and let's say you have no investment properties whatsoever right now. So you're just wanting to get into the investment property realm.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
I had a gentleman that had a couple $100,000 worth of equity in his primary residence. He did not have a significant amount of money in his checking savings. He had a decent amount in his 401k, but nothing appreciable in checking savings. But he had a ton of equity. So I did a home equity line of credit and got him $200,000 out of his primary residence. So now he's got $200,000 sitting in his account. He's paying interest on that, prime plus 0.5 or whatever rate it was. And then now I taught him, I said, this is going to sound weird. I'm a mortgage guy. I'm telling you to go buy a property with cash. He's like, you're telling me to go kick cash? I said, yes. I said, because here's why. We're going to cross collateralize that property and buy even more properties by leveraging that free and clear property. So what he did is he spent $200,000 on a single family detached home that he now owns free and clear, put a renter in it. He's now making $200,000. I think his rent was $2,500 a month. His HELOC payment, I think, was $1,000. So he's cash flowing $1,500 a month on that property, which is great. But now he's got $200,000 worth of equity sitting there, not working for him. He's just cash flowing a little bit. He's cash flowing on that property. So then we cross collateralized that property, put a $150,000 lien on that property, use a factor of 5 to 1. He then went and five times 150 on that, because you go up 75% LTV, won't worry about the details there. He went and bought a $650,000 property, again with no money out of pocket. And that $650,000 property was a quadruplex, so 4 doors on that. So now he took money that was sitting there doing nothing for him, equity in his house, and now has 5 income-producing leases with no money out of pocket.
Yeah, that is a valuable strategy. I love that example. Thank you for sharing that. So, what have been some of your main keys to keeping your business to run smoothly?
So I was in the military for 20 years. I was a nuclear engineer. So I'm the nerdiest nerd you're going to have on this podcast. You turn off the lights, I probably glow green in the dark. My wife probably sleeps with a sleep mask because I grow. Anyway, I just with all that. I took that discipline from my 20 years as a military nuclear engineer, and I applied that same concept to my company. So I have a 70-page standard operating procedures. That define exactly what to do, when to do it, how to do it, and why to do it, with a checklist for every single milestone in the loan, from the time that you become a potential client for me to 10 years after you close a loan with me. All that has checklists and exactly what needs to happen, who needs to do it, and how it needs to happen.
Yeah, absolutely. That's so important to have that structure and discipline. What initially got you into this space? It's a big shift
I think,
from the nuclear stuff.
yeah, I think it's the same story could be for anybody in sales. Is usually it's an accident.
Mhm.
Way back in the day, I was a part-time real estate agent. I got out of that because I got transferred to the military. And then when I retired from the military, I'm like, maybe I'll get back into real estate. But I'm like, I don't want to put people in my car and drive them all weekend and all that kind of stuff. So I was like, maybe I'll get into mortgages, or maybe I'll get an insurance. So I called up my old buddy that was my go-to mortgage guy. And no real estate agent is successful without having a go-to mortgage person that's sharp. And I called my go-to mortgage person from way back when. I said, hey, what do you think about me getting in the mortgage space? And he said, well, come on in, let's talk about it. And then I worked for him for 3 years. Wonderful, wonderful 3 years. We're still buddies, but after 3 years, I went off and started my own company. That was 7 years ago. So I've been doing this for a decade.
Amazing.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And where are you, what are you focused on solving or scaling to next?
So there's a couple different aspects that I'm focusing on there. I love first-time home buyers because there's such a tremendous need for home ownership. The average homeowner has a net worth of 44 times the net worth of the average renter. And that's 44x, right? 44 times, not 44%. It's not like if you have net worth of 100,000 as a renter, the average homeowner's worth 144,000. No, 44 times is the average net worth difference between a renter and a homeowner. So it's tremendous. It creates generational wealth. What I find even more fascinating is that the average kid that lives in a house that's owned has a grade score of 1 letter point better than the average kid that lives in a home that's rented, right? So that stability of being in a home that's owned over a home that's rented has a tremendous effect on the future of America and the kids' education. And therefore we get better leaders, we get better, technicians, we get better engineers, we get better doctors from families that own their home than somebody that's a lifetime renter.
Yeah, absolutely. So, do you work with a lot of investors as well? I know you mentioned previously some strategies with the investing, but yeah, is that something that you're targeting and working with in your areas?
I do. I say it's probably about 20%, maybe 18 to 20% of my loans are investor loans. And that could be the strategy that I talked about with that earlier. It could be someone that just wants to purchase finance a investment property with a normal conforming loan. It could be someone that wants to use the rent from the property to qualify and not use their personal income to qualify. Maybe they have a bunch of investment properties and they write off a loss on everything, so they can't do it. Maybe they want to use bank statements to qualify. So there are a number of tools that are outside the box thinking to help people acquire investment properties. And 1 out of 5 loans is that I do, and I'll close 15 to 20 loans here. Our company will close 30 to 40 this month. So I'd say 1 out of 5 are investment property loans every month.
Amazing. Yeah, that is really big for supporting those people. Are there any sort of common hesitations or obstacles that people maybe face that you educate them through so that they can get the best result with their housing and their finances and loans?
The typical first conversation I like to frame as a discovery call or a meet me, I meet you call, because not everybody wants to work with me. I don't want to work with everybody. So we kind of have that first call of, hey, here's how I work. What are your goals? Here's how I can help with those goals. Here's how I work. And part of that is understanding their finances and are they ready to do either to become a first-time home buyer? Are they ready to be a move-up buyer? Or are they ready to get into the investment world? Investment side of it, if we want to concentrate on that, is generally the bigger the down payment, the better terms you're going to get. And the better terms you get, the better cash flow that property is going to create for you. Now, I do have the ability to finance a property that's going to be underwater on cash flow. Terms aren't as good for that. But if your long-term goal makes sense, then we could do that loan. Like I've got one loan that'll close, I think October 10th-ish. Person is buying a condo as an investment property, and the prospective rent on this property is not as great as what they initially thought. But their goal is to rent this out for 2 years. He's going to retire from up north, and then they're going to move down here to the south and occupy that as their primary residence. So they're going to lose a little bit of money on this deal every month, but long term, they're going to be able to acquire the property they want overlooking the beach, where they want it, and have it basically be pretty much paid by a renter for a couple of years until they settle here. So every scenario is different, and I need to understand what the client's goals are, what their current finances are, and see how we can make that work for them.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, that's so important to make it work for each individual situation. So let me ask you this. Everyone has those moments in business where things get real. Maybe a deal goes sideways or you have to pivot fast. Would you mind sharing one of those moments that you've experienced and what you did to overcome it?
So that could be every single mortgage in America.
Right.
So Tom, even the little old lady that's fixed income, Social Security, annuity, 800 credit score, 30% down, there's going to be something that causes a hiccup in that file. It's probably not her. It might be title. It might be insurance. It might be the homeowner association. It might be the appraisal. It might be the comp. There's going to be something. So it's a matter of getting ahead of it. I am in the guidelines every single day. I've been doing this for a decade, and I still get in the guidelines every day. And I preach this to the sales reps that work for me. You've got never be too cool to answer your mama's phone call or to go open up the guidelines. You've got to get in the guidelines every single time. So I had this one particular loan. It was actually a friend of mine. He had been a friend of mine for a decade, and he was selling a house and buying a new house, and he was buying way over what he should have been doing. It worked, but I'm like, Ray, do you really want to be doing this? Oh, I got to buy this house. Okay. So fast forward, we're almost done with the file and the title work comes in. And on the house he's selling, there's a big lien on it. I won't bore people with the lien, but he didn't know about this lien that he had acquired. It was a legit lien of about $20,000-$30,000 years ago. He had the house for a decade. He just completely forgot about it. It was a silent lien, so he didn't have to make a payment or anything like that. So now we had to come up with, he was going to use that let's call it $20,000. He was going to use that $20,000 to pay off debt and to make in order to make the debt to income ratio work on the purchase that he was acquiring. Well, now $20,000 of assets are gone. We had to figure out how to make this work. So I went through, so at this point, it's a debt to income ratio issue. How do we make that debt to income ratio? How do we solve that? So first is paying off debt, but we were going to use the money from the sale to pay off the debt. Well, now we don't have that money. We've got to increase the interest rate opposite of buying points, getting points, using those extra points to pay off, to use that to cover the closing cost, use the closing cost to pay off what we were going to use for closing cost to pay off the debt, go strip insurance down. Won't bore your users, but there's about 4 different things I could do with an insurance policy to strip that insurance down to get the insurance significantly lower, which then reduces debt income ratio. There's some things you can do with a tax certification to get the taxes down. So there was a number of moving parts that I had to do in order to get debt income ratio down whenever we all of a sudden lost $20,000 worth of assets in the file. Can't be done in every file, but I have done similar things, a couple dozen times over 10 years, whenever you run into a debt to income ratio issue.
Yeah, absolutely. Sounds like a challenge that you are able to have those solutions to conquer. So that is always important. Awesome. So when it comes to growing your business, whether that's through networking or creating just new relationships, what are some things that have made the biggest difference for you?
I figured out a long time ago that the real currency in this world is authenticity.
Hmm.
There's no trick. There's no secret words. There's no script. It's just being yourself. And sometimes that costs me deals. There's people that I'll start talking to them and I'm like, hey, this is what I need. I closed one deal, last month that was one of the most difficult deals I've ever done in 10 years. And I told him, I said, the only way you're getting this house, and he had already been declined somewhere else. And it was such a bad experience that the real estate agent that was on the previous deal refused to work with this client again. He's like, I don't want anything to do with this client. He can go find another agent. I'm done with him. I told the client, like, if I say jump, you don't say how high. You jump, and then halfway up say, Jason, is this high enough of a jump? That's the type of compliance that I need from you if you really want this house, because your loan is going to be one of the most difficult loans I ever close. Some people won't want that type of discussion from somebody. But if you are a difficult loan and I say I can do it, I will do it. But I need you to So I need people that are okay with me being authentic. I am a little bit rough. I'm 20 years military. Vast majority of my loans are VA loans. So veterans generally are okay with that. This was a veteran. But as far as what I do, I mean, it's just being myself. Sometimes that's a turnoff, but I think most people appreciate it. And I really do think that is a currency in today's world, is authenticity.
100%. I agree with you. Relationships are everything in this space. And yeah, I think it's like the most important asset, especially when you're in this business for the long-term vision.
For sure. And people are making, they could be $100,000 decision. I've got one loan that's closing on Friday. That's a $1.1 million loan. People are making $1 million decisions and trusting me to be the debt advisor on $1.1 million decision. You have to be, whenever you're making these big decisions, you have to be picking somebody that knows their stuff. You don't want to be picking somebody that you found on the internet that is in a call center. You want to find someone that has hundreds of reviews and really knows their stuff.
Yeah, absolutely. Those kind of decisions are so important to do your due diligence and connect with that person, see what they know, and yeah, how they can really be of support through this big process that you're in. So before we wrap up here, if someone wants to reach out, connect, collaborate, learn more from you, where can people find you?
Sure. As discussed, my name is Jason Sharon. You find me on all the major social media platforms. homeloansinc.com is my website. I can't believe I got that lucky to get that website, homeloansinc.com. I have the easiest phone number in the world to remember. My phone number is area code 843. That's South Carolina. 843 low rate is my phone number. 843 low rate.
Perfect. Well, listen, I appreciate your time, your story, and your perspective. So thank you for being here.
Absolutely. I'm honored that you had me.
And for those listeners tuning in, if you got value, make sure that you've subscribed. We've got more conversations with operators just like Jason who are building real businesses. And we'll see you all on our next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.